Okay, good morning, no? So now, we'll be discussing yung topics natin or topic natin about cost of capital. Basically, no, this is also part ng tinatawag natin capital structure. Okay? Capital structure kasi basically is the mix of debt and equity financing natin. Okay? Now, this is composing ng ating mga long-term sources of funds. Okay? So, long-term debt and equity. So, yung composition na yan yung ating capital structure. Ngayon, so ano ba tong cost of capital and how it is related to this? Cost of capital simply is the cost of borrowing funds. Diba? Basically naman, if you're using something which is not yours, binabayaran natin. Just like, kunyari, nagbo-boarding house ka, hindi sa'yo yung room, so hihiramin mo, may babayaran ka. Okay? Or kung nagre-renta ka ng service, so may babayaran ka doon. Okay? If you're using something which is not yours, may cost. So, ganun din yun, no? Using other people's money, may cost din yun. Yan yung sinasabi natin, cost of capital. Because basically, pera ng ibang tao yun, ginagamit mo. Okay? Yan, cost of capital, cost of using long-term funds from investors. Okay, basically, no, when it comes to our long-term sources of funds, generally classified yan into two. Meron tayong tinatawag na debt and equity financing. Of course, yung debt is yung utang. Okay? Equity financing, ito yung coming from stockholders, no, in the form of shares of stocks. Okay? Ngayon, from the point of view of the investors, ano ba yung ina-expect nila? No? Pag nag-i-invest sila or nagpapagamit sila ng pera nila to the business. For long-term creditors, of course, ang ina-expect nila is interest. Okay? So, the part, yung cost of borrowing funds from these long-term creditors, interest yung binabayad natin. Kung preferred shares or preference shareholders yan, dividends. Okay? Yung binabayad natin sa kanila. Pag ordinary shares, ang ina-expect nila, okay, is aside from the dividends plus the growth. No? Kasi nga, sabi natin, technically, talking about who owns the corporation, it's the ordinary shareholders. So, pag lumalaki rin or nag-grow din yung corporation natin, sila yung ultimately nagbe-benefit. So, sa kanila na pupunta. So, dividends and growth. Of course, the lower the cost of capital, the better for the company. Syempre, parang tipid, mas maliit yung binabayad mo. Okay? So, it serves as a benchmark for evaluating proposed investments. Or basically, pati rin naman sa business natin. No? It means dapat we should earn income or profits at least above the cost of capital. No? Kasi pag nag-earn ka below the cost of capital, lumalabas yung pera. No? Pero pag nag-earn tayo ng profits more than the cost of capital, nag-grow yung company natin. Kasi naiiwan yun dun sa retained earnings. Okay? Now, paano ba tayo nagko-compute ng cost of capital? So, meron tayong mga formula dyan. First, for long-term liabilities, for example, long-term loans or bonds payable, ang ating cost of capital is 1 times after tax rate ng interest nila. Okay? After tax rate. No, bakit after tax rate? For example, no, yung interest na binabayad natin sa bonds is 10%. And then the tax rate is 30%. So, ang effective nun is 10% times 1 minus the tax rate na 0.3, or that is 70%, so that is 7%. Okay? After tax rate ng interest. Bakit after tax rate? Kasi ang interest expense is tax deductible. Okay? So although nagbabayad tayo ng interest, but that effectively reduces our tax. Kasi expense siya, tax deductible. Kaya after tax rate yung binabayad natin. Okay, ganun yan pag interest, pag long-term debt siya. Ngayon, pag preference shareholders, So, paano tayo nagko-compute ng kanyang cost of capital? Dividends per share, okay? Dividends per share divided by the market price per share. Net, okay? Ano ba tong net na sinasabi natin? Pag existing yung preference shares, market price lang. Pag issued na siya. But, for those na i-issue pa lang natin, kasi meron tayong tinatawag na flotation cost. Flotation cost yung ginagastos natin sa pag-issue. Okay? Nung shares. So ngayon, pag bagong issue yung shares, ile-less natin yung flotation cost kasi effectively, babawas yan dun sa cash na marireceive natin sa pag-issue ng shares. So, ibabawas natin yung flotation cost. So, yun yung gagamitin natin. So, dividends divided by the market price of the share net of flotation. Okay? So, ganyan when it comes to the preference shareholders equity. Later, meron tayong problem na sasagutin for that. Next, for ordinary stockholders equity, medyo ganun din naman siya, guys. Okay? Dividends per share divided by market price net. Kung i-issue pa natin, kasi nga may flotation cost, yun nga lang, plus growth rate. Okay? Plus growth rate. Kasi yung sinasabi nga natin, guys, pag may growth yung company, ultimately, doon na pupunta yan sa ordinary stockholders. Okay? So, aside from the dividends, pag merong growth na pupunta sa ordinary, so part yan ng kanilang cost of capital. Okay? Or also, consequently, sa retained earnings naman, sa retained earnings, take note, this is an internal source of funding. Yung ordinary kasi na sinasabi natin dito, coming from external. Ito retained earnings, ito yung na-accumulate natin sa business, which is dumadagdag na rin dun sa ating nagiging capital. Okay? So, expected dividend per share divided by market price per share. Wala na yung flotation cost kasi hindi naman natin ini-issue yung retained earnings. Nandyan na yan . No? Plus growth rate. Okay? Ganyan, no? Yung para sa ordinary stockholders equity. Technically, no? Yan lang naman yung kino-consider natin, no? For simplicity of this purpose. Now, effective interest rate. Ito yung sinabi natin. Ito yung technically na I think may topic tayo na discuss or hindi ko alam kung na-discuss na natin or ano sa ibang topic. Okay? Ano ba yung effective interest rate? No? Effective interest rate is net borrowing cost. Kung magkano talaga yung ginagastos natin divided by market price net. Okay? Sana itong borrowing cost, net borrowing cost. Yung borrowing cost, ito yung ginagastos natin sa pag-borrow. Technically, the interest is the borrowing cost. Okay? Minus savings, kung meron tayong savings. Kasi, I forgot kung saan topic ba yung may effective interest tayo na kinumpute. Kasi let's say, kunyari, uutang ka dun sa isang bangko. And then, sometimes, the bank would require na maglagay ka ng compensating balance. So, yung compensating balance, nag-earn siya. So, parang yun yung magiging income. No? So, ima-minus mo ngayon yun. I just forgot lang kung saan part ng discussion dito yun . Pero meron yan sa financial management yata. Effective interest rate. Okay? Or net borrowing cost divided by net proceeds yung sa market price net. Kasi we have to consider din kung magkano effectively yung pera na magagamit natin. Okay? Let's say, kunyari, uutang ka na 5 million. But, ang sabi, yung 1 million, hindi mo magagamit kasi ilalagay mo siya as part of compensating balance. So, technically, 4 million lang talaga yung magagamit mo. So, yun yung i-consider mo sa effective interest. Okay? But that is, hindi naman siya yung typically na ginagamit natin concept na effective interest dito. Effective interest ginagamit natin is yung pag sinum up natin or pag diniscount natin yung cash flows ng ating loans or bonds natin, babalik siya dun sa market price. No? Yung effective interest talaga na ginagamit natin, typically sa financial accounting din. So, yun yung medyo concept na effective interest na ginagamit natin dito. Okay? Market price is of course yan yung price in the market, yung listed price niya. Ibig sabihin, when you buy a particular investment, or pag, in short, parang pag pinautang mo yung company, ito yung rate. No? Kasi hindi naman, especially when it comes to the bonds, hindi naman ibig sabihin kung magkano yung face amount ng bonds, yun din yung selling price niya. No? Let's say if the bonds are selling, or ang face ng bonds is 1,000, it could go higher, like 1,050, or it could go lower, 950 pesos. Kaya nga nagkakaroon ng difference yung coupon rate or yung stated rate versus dun sa effective rate. Okay? So yan. Possibly iba yung market price. And of course, yung flotation cost na mention natin. Cost incurred in listing bonds and equity securities. Ginagastos natin ito guys, no, sa pag-issue. Just like underwriting fees, legal fees, and registration fees. Okay, so ganyan, in short, bumabawas yan dun sa natatanggap natin. Kaya net yung computation natin kanina. Market price of the securities net, whether equity or debt siya. Now, tignan natin guys, no, compute natin yung cost ng mga funds na to. So, unahin natin, first is the cost of debt securities. Tingnan natin, meron tayong problem dyan. The company is issuing, it's 10%. Yan yung nominal rate, stated rate, or coupon rate. Yan yung nandun sa bonds mismo. 4,000 par, bonds payable at 110. That's the selling price. 110 of the face. So, ibig sabihin, if the par is 4,000 times 110, that's 4,400. That's the selling price. My flotation cost na 7%. The effective tax rate is 40%. Okay? So, question first, compute the effective rate. Yun nga lang yung effective rate na computation niya, hindi talaga yan yung supposedly. For simplicity purposes, typically dapat binibigay ng effective rate. Kasi nga, the effective rate is the rate wherein pag diniscount natin yung future cash flows, babalik tayo dun sa market price. Okay? Pero for the purpose of this, let's say ang kanyang effective rate. Okay? Ang kanyang effective rate is 5.80. Yung dito niya kasi, yung sa effective rate niya, first is the net borrowing cost is yung kanyang interest, 10%. No, yan yung babayaran talaga natin. So, 4,000 par times 10%, that's 400. Okay? Divided by the net proceeds. First, yung makukuha natin guys doon sa bonds is, di ba 4,000 siya. It sells at 110. So, 4,400. That's the selling price. Technically, yan sana yung proceeds na marireceive natin. Kaso na may flotation cost Gagastosan natin ng 7%. So, 93% lang ang makukuha natin. Okay? So, based on that, ang ating effective rate is 9.7752%. Okay, that's the effective interest rate. Now, when it comes to the cost is yung kanyang K, no? O depende, maraming ginagamit natin. O pwede K, no? That's a typical. Cost of the debt is, ano sabi natin? The effective interest rate divided by after-tax rate. Okay? Ay, sorry, bakit divided by? Times pala yan. Times after-tax rate. Ngayon, the effective rate, ang sabi natin is 9.5572%. Times. Ang after-tax rate kasi, since the tax rate is 40%, so ang after-tax rate is Okay? Therefore, ang cost of debt or itong bonds na to is 5.45. You see, although ang effective rate niya is 9.55. Yan yung binabayad natin. But since this is tax deductible, in effect, meron din naman babawas na sa tax natin. So effectively, ang cost of debt natin or yung cost nitong bonds na to is only 5.45%. Okay tayo rin, guys? So, ganyan na. Effective interest niya after tax rate. Ganun tayo mag-compute ng cost of debt. Now, let's go with the cost of preference shares. Okay? Simple lang naman yung cost of preference shares. Dividends divided by price. Okay? Price net. Okay? So, for example, dito, meron siyang problem. B company is issuing its 12%, that's the dividend rate, 200 par, that's the par value, preference share at 260, that's the price. That's the market price. Flotation cost is 6% and the applicable tax rate is 40%. Diyan na lang dito yung tax, hindi na siya applicable kasi this is equity. Dividends is not expense. They are not tax deductible. Okay? So, hindi siya after tax. So, simply, cost of the preference share is yung dividends divided by price net. Okay? Ang dividend dito, 12% daw eh. Pag sinabi 12%, that's 12% of the par. Okay? Yan yung kanyang dividend preference dividend rate. So, 200 times 12%. So, ang dividend niya is 24 divided by. Yung price niya, okay, sana yung price na 260. Kaso lang itong 260 na to, may flotation cost eh. So, hindi yan yung makukuha natin. May flotation cost na 6%, so that's like 94% lang. Okay? Kasi mababawasan yung makukuha natin. So, effectively, magkano lang ba yung magpapasok na pera sa atin? Pag kinompute mo yan, that's 249.6. Okay? Ha? Okay. Na gano'n lang. Supposed to be 6% yung flotation cost eh. Pero nagka, na siguro siya ng paglagay. Anyway, supposed to be 94. So, siguro bumaliktad na lang yung nilagay niya. Anyway, sige. Kung sakaling ganyan, kung ano man yung, basta ano yan guys, ibabawas mo yung flotation cost kung magkano siya. Kasi, that will reduce the amount na papasok sa atin. So, effectively, magkano lang ba yung magagamit ng pera? Okay? So, sige, gamitin natin kung magkano man sa kanya dyan. Hindi ang importante. Ang importante, alam natin kung paano. This is 9.62. Ko alam kung magkano ginamit niya. Anyway, 9.62%. Yan yung cost ng debt. Preference share, cost of the PS. Now, when it comes to cost of ordinary equity, medyo pareho din naman siya, guys, no? When it comes to cost of preference shares. Yun nga lang, the difference is that meron tayo ditong growth rate. Okay? Basically, ganun din naman siya. May problem tayo dito. Si company is issuing its 500 par ordinary share at 62 with the flotation cost of 10%. Dok, mali nga siguro yung 500 niya, parang ang layo. Parang masyadong mura. Hindi ka naman pwede mag-issue ng shares below the par. Siguro baka 50 pesos lang yung par niya yan. Not 500. Okay, the company is expected to grow at the rate of 8%. And the current dividend rate is 8. Applicable tax rate is 30%. Although, hindi natin ginagamit yung tax rate kasi nga hindi ito tax deductible. Okay? So kung ordinary shares ka, ganun pa rin. Dividend. Dividend is 8 pesos. The price is 62. Yun na nga lang, pag ordinary shares, kailangan mo i-consider yung flotation cost. Okay? So, magkano yung flotation cost? That is 10%. Okay? So, 90%. Yan yung sa kanya, 1 minus 0.10. Ganun pa rin naman yun, 90%. No? So, the price is 55.8. So, dito, this is 8 divided by 50. Plus yung growth rate pa pala na 8%. No? 8 divide 55.8 plus 8%. So, effective rate ng ordinary natin is 23.48%. Cost of ordinary equity. Yun nga lang, with the retained earnings, ano yung difference ng retained earnings? Wala na itong flotation cost. Wala yung flotation cost. Kasi hindi mo naman ini-issue to eh. So wala kang gagastusin sa registration, underwriting fees, legal fees. Okay? Okay, sige. Tignan natin, no? Let's try to answer some of the multiple choice problems here. First, number 179. Sa multiple choices. 179. Tinatanong, magkano daw yung after-tax cost of the bonds? So, number 179, pakisolve. Okay na, 179. Tignan natin, no? Tinatanong, after-tax cost of debt. So, nakabenta ng 5,001,000 par value, 12% coupon bonds. The bonds were sold at a discount and the corporation received 985. The bonds corporate tax is 40%. Compute muna natin kung magkano yung effective interest niya. Okay? Using the basic formula. Magkano ba yung interest o yung borrowing cost na gagastusin natin? 12% of 1,000, it's 120. 120, tama? Ngayon, yung bonds, although walang flotation cost na sinasabi, pero the ultimate question lang dito is magkano ba yung papasok na pera sa atin? Or effectively, magkano ba yung pera na magagamit natin? It is discounted daw at 985. So, yun yung magagamit natin, 985. So, magkano pa yung effective interest rate nito? 12.18%. Ganyan? Now, cost of debt is the after-tax rate nito. Okay? So, 12.18% times. Since 40% yung tax rate, after tax is 60%. Therefore, magkano yung cost of debt natin dito? Cost of bonds. Magkano? 7.31%. So, number 179, answer natin is letter A. Now, next 180. Tignan natin. No? Tinatanong magkano daw yung cost of preferred stock. Pakisolve. Okay, number 180. Compute muna natin kung magkano yung dividends niya. Ang sabi niya kasi, magbebenta siya ng cumulative non-participating PS. The par value is 65 and the dividend rate is 6%. So, 65 pesos, 6% yung dividend rate. So, magkano yung dividends niya? 3.9. Magkano? 3.9 peso per share. Okay? Ngayon, yung cost ng preference share is, of course, the dividends 3.9 divided by market price. Magkano ba yung market price? Ibebenta daw tong shares at 68. Kaso lang, may flotation cost na 4 pesos. So, 64 lang technically yung marireceive natin net amount. So, magkano yung effective rate ng preference shares? 6.09%. So, number 180, answer natin is letter D, dog. Next, 182. Okay, 182 para sa ordinary shares. Dividend Growth Model or Gordon Growth Model, yun yung merong plus growth rate na ginagamit natin na formula. So, paki-solve cost of ordinary equity. Okay, sige, 182. Parang ganito rin naman siya, no? Except that may growth rate tayo. Okay? Cost of OS. Stock price is 30 while the dividend is 3. Tapos sabi niya, meron daw 10% growth rate plus 10. Okay? So this is 10 plus 10. So this is 20%. So 182, answer natin is letter D, dog. Now, sige, let's go back with the discussion. Ganyan yung computation natin ng individual cost of capital. No? Very simple, very basic lang. Ngayon, next we'll be discussing yung weighted average cost of capital or WACC. Simply, i-average natin yung mga cost of capital na yan based on kung gaano kalaki or yung ratio ng kanilang financing. No, of course, no, yung mas malaki yung funding natin, mas malaki yung cost na mag-allocate dun sa kanya. Okay? Actually, very basic lang naman to guys, no? So, maraming ways to compute. Pwede mag-compute ka ng absolute amount or pwede mag-compute ka ng average. Let's say, for example, parang ganito lang yan kadali. Gamitin natin yung tatlo. Let's simplify as this. Meron tayong tatlo na financing. Bonds, PS, and OS. Now, let's say the cost of bonds is, sabihin natin 7%. Maliit na yan kasi after tax eh. Okay? Let's say the PS has a 12%. Very typical na dividend rate sa PS. Okay? And then yung OS, let's say 18%. Medyo malaki kasi may expected growth rate. Okay? Now, aside from this, ito yung financing natin. Let's say we have a total of 10 million in financing. Okay? Ito yung composition niya. Let's say 3 million coming from bonds. Let's say 2 million coming from PS and then 5 million coming from OS. Ano lang yung gagawin natin dito, guys? I-average natin ito based dito sa kanilang composition. Okay? I-average natin itong cost na to based dito sa composition. So, of course, pwede mong gawin dyan, pwede mag-compute ka nito. I-times mo. Tapos, i-add mo sila. I-divide mo sa 10 million. Okay? So, pwedeng ganun yung gawin mo. Or, pwedeng gumawa ka ng fraction using this. So, pwedeng 7% times 3 of 10. 3 million of 10. 12% times 2 of 10. 18% times 5 of 10. So, pag na-solve mo, total mo ngayon, ito yung weighted average cost of capital. Okay? So sige, kunyari, let's solve using this one. Yun na nga lang, pag dito, nag-compute ka ng absolute amount, medyo marami kang kukumpitin. Like this, 7% of 3 million, 210,000. Ito, 12% of 2 million, 240. Tama? Ito, 18% of 5 million. 900. So, ito total natin ngayon. $1 million. So, di-divide mo ngayon yan dito sa 10 million to get the average. $13.5%. Nakuha? So, in-average lang natin itong 7, 2, and 18. So, you see, kung titignan mo yung kanilang median, mean kasi is the average, tama. Titignan mo somewhere sa gitna, mas malapit siya dito sa taas kasi mas malaki yung weight nitong mas malaki yung cost eh. Okay? But of course, kung mas malaki yung nandito para dito, it will lead towards dun sa mas maliit na rate. Okay? So dito, try natin using this. 7 times 3 of 10. Point 1, 12% times 2 of 10. Tapos 18 times 5 over 10. 9. Pag tinotal natin, 13.5. Okay? So either way, pareho lang naman yan, no? Depende na sa inyo kung ano yung gagamitin nyo na pag-solve. But the point here is that i-average lang natin yung cost nitong tatlo. Okay? To see kung magkano yung average cost considering yung iba-iba nilang weights. Okay? Dun sa financing natin. Now, of course, this is the basic one. Okay? Well, ganun din naman itong number 2 if using the fair value mix. Yun na nga lang sa fair value mix, guys. Instead, you'll be using fair values for this. No? Ito kasi sinample lang na natin ang absolute amount eh. But if, kung fair value din naman yung basis na to, fair value din yung gagawin natin basis. Okay, let's say kunyari yung bonds, magkano ba siya selling? So, titignan mo kung magkano. Just like dyan sa illustration niya, the bonds are selling at 102. So, times 102%. The preference share equity is selling at 96. So, times 96 mo yun. Yung ordinary share equity is selling at 10. So, that is 8 million siya. Ngayon, yung sa retained earnings, that's the remaining na lang. Okay? So, 8 million minus yung sa bakit minus 1 million? Yung 1 million na yan, wala namang ibang fair value ang retained earnings eh. Kasi hindi naman siya shares. Okay? Hindi naman siya shares, hindi naman siya instrument eh. Accumulation lang siya ng profits. So, kung magkano na yung value nun, yun siya. So, ganun din naman yun, guys. Yun nga lang, ang pinagamit sa kanya is fair value. Either way, kahit na ano naman yun sa dalawa eh. Okay, depende lang dun sa gagamitin mo. Whether book value or fair value yung ginagamit natin. Okay. So, okay tayo dito sa WACC. Okay tayo dito sa WACC. Sige nga, i-try natin. Mag-solve tayo ng weighted average cost of capital. Dito sa number 189. 189, tinatanong magkano daw yung cost of capital. Basically, the average na to. So, magkano weighted average cost of capital, pakisolve. Okay na? So, nakalagay dyan yung data, no? Basic lang naman to guys, no? I-average lang natin siya based dun sa total funds. The total funds is 1,350. Yung composition niya is 150 from debt. Preference is 500. Ordinary is 700. Yan ang baliktad, no? 18, 15 po. Medyo pababa yung cost of capital na ginamit na. Pero okay lang, ganun gamitin natin. So, 18% times. Lagyan na natin agad, no? 15 over 135. Depende sa inyo kung gusto mo lagyan mo ka ng 0 or ano. Parang lang naman yan eh. Diba? Tapos next, 15 times 500, 1,350. Tapos yung 12% sa ordinary times 700 over 1,350. So, magkano to? 2, 56, and so the total is 78% weighted average cost of capital. So number 189. So answer natin is letter D, no, 13.78%. Okay tayo dyan guys. And then ano na lang natin. Actually konti lang naman. No? Isa lang sa pinakamadaling ano ito. Financial leverage. Ipasok na rin natin yung topic on financial leverage. And itong page 776. The U-shaped marginal cost of capital. Okay? Now, generally, although except for this particular problem, generally, the cost of debt talaga is cheaper compared to the cost of equity. Well, number one, cost of debt is tax deductible. Tama? So, generally, may kita mo, babawas pa natin yung tax, so mas maliit yung cost niya. And secondly, sa OS, they are expecting growth. So, dagdag yun dun sa kanilang cost. Okay? Kaya nga, if you want leverage or financial leverage, typically, you go with debt financing. Well, number one, debt financing is cheaper. Number two, ang mangyayari kasi, more debt financing, it means less equity financing. If you are the owner, it means konti yung equity, konti yung investment mo, konti yung maghahati-hati sa profit, mas malaki yung kita percentage-wise. Tama? Mas malaki yung kikitain percentage-wise. Kasi konti yung equity, konti lang nilagay mo eh. Nakuha? So yun yung sinasabi natin guys na financial leverage. The ability na ginagamit ng company, yung financing niya, debt financing. Okay? To maximize yung return on equity. Kasi return on equity is net income divided by equity. So less equity, mas maliit yung denominator, mas malaki yung return on equity. Okay? Financial leverage yung tawag natin doon. And, titignan na natin guys, ito yung U-shape na cost of capital. This is K, or this is the cost. And yung debt to equity ratio, it means ito yung tendency to use debt financing. Okay? As we go towards more debt financing, since mas mura nga siya, yung weighted average cost of capital natin, pababa na pababa na pababa. Okay? Kasi, mas maliit nga, mas cheaper yung cost of debt. Tama? So, more debt financing, basically, mas maliit yung weighted average cost of capital natin. Okay? Yun nga lang, it will come to a certain point. Depende yan, case-to-case basis, depende on the company, depending on the industry and certain things. Dadating yung point wherein so much debt will become risky to a company. With added risk, added cost yun. So eventually, yes, you are leaning towards debt. Lumilit yung cost of capital, but because of the risk, medyo tumataas na naman ulit yung cost. Kaya U-shape yung tinatawag dyan. Okay? Hindi naman limitless yun na puro debt lang tayo ng debt. Nabababa yung cost. May risk. And then yung added risk na yun, may cost. Okay? Kaya nga pa U-shape siya. So dito, yung tinatawag nating optimal capital structure is the point wherein yung pinakamababa yung ating cost. Siyempre, mababang cost, mas pabor sa company. Okay? So, it's a sweet balance between hanggang kailan lang tayo magma-maximize ng debt. Kasi baka pag nagdagdag na tayo ng debt, tumataas na yung kaniyang cost of capital. Nakuha? So, yan na yung sinasabi dito na U-shape. Okay? Na marginal cost of capital. So, the point yung pinakamababa, yung cost of capital, that's the optimal debt to equity ratio. That's the point lang kung hanggang saan lang tayo pwedeng gumamit ng debt. Tapos the rest is of course equity na yung gagamitin natin na financing. Okay tayo dyan guys? Okay tayo dyan? Ito, didiscuss lang natin na mabilis yung didiscuss natin ng konti na ano. Yung dividend growth model, yung next dyan, actually yan din yung ginagamit natin talaga. Pag nag-compute ka kasi guys ng cost of, typically yung OS natin, meron tayong mga ginagamit na valuation techniques. No? One is itong dividend growth model na pwede din natin, actually ginagamit din natin yan in determining the price. Okay? But in terms of determining the growth, ginagamit din natin yan. Yan din yung formula na binigay natin sa inyo kanina. Wherein the cost or the effective rate ng ating ordinary shares is yun na nga, dividends divided by the price plus growth rate. Okay? Actually, using the dividend growth model nga, typically ginagamit ito sa price. Price is equals to dividends divided by I or R minus G. Yun na nga lang, pwede rin natin siyang gamitin in terms of computing the R. Okay? Or the rate of return. So either way kasi ginagamit natin yan yung Gordon growth model. So in one way, katulad ng ginawa natin kanina, yung R is D divide P plus G. Diba? The rate or yung percent natin, yung K is D minus P plus G. The other one, on the other hand, ginagamit din natin yung Gordon growth model to get the price. Price is D divided by R minus G. Okay? So, ganyan yung ano. Pero ano lang din yan guys, medyo ganyan din yung application na ginawa natin kanina. Yun nga lang, in some cases, pwede natin gamitin ito or depende sa problem. Okay? So, pwede mo siyang gamitin in computing the R or the K, or pwede rin natin siyang gamitin in computing the P or the price. Okay? Hindi naman siya nalalayo dyan. Just like, yun nga lang dito, sa financial management din talaga actually, ang computation natin dito is, kunyari dito, no, D1, this is D1. This is P0. D1 is expected dividend. Hindi naman pwede historical. Like, kunyari, today is now. Ano ba yung next dividend na in-expect natin? Yun yung D1. Okay? Next dividend expected. Or, let's say, end of the year, tapos na yung dividend last year, in-expect natin how much is the dividend next year. Basta yung expected dividend on the next na dividend payment. P0 is the price now. Okay? Price now. P0. Ganyan din naman siya, guys. So, P0 B1. Okay tayo dyan guys. And then, ano lang, tapusin natin yung discussion dito and then let's deal with the multiple choices. Yung next, another way of computing the cost of capital is itong tinatawag natin na CAPM model. Capital Assets Pricing Model. Okay, more direct and pragmatic approach in determining the cost of ordinary equity. Okay? Ano ba yung computation dito ng cost of equity using CAPM model? Ito yung formula niya. RF plus beta MR is R market yan minus risk-free RF risk-free. Now, let's talk about this mga elements na ito yung sinasabi niya. RF plus beta RM market rate minus risk-free rate. Okay? First, let's talk about RF, risk-free rate. Ito basically is the rate of return for those we considered risk-free investments. Although, typically, there's no such thing as a risk-free investment. But, there are investments which are, the risks are significantly small. That we consider it as risk-free. Just like investments in, yung mga maliliit nga lang yung returns na to. Just like returns on yung mga government securities. Just like T-bills, T-notes, no? T-bonds, yung mga treasury. Okay? Mga money market investments natin. Typically, mga maliliit yung return nitong investments na to. Okay? We consider those as risk-free. Not totally risk-free, but yun na nga, the risk is so insignificant. Okay? So, yan yung risk-free investment. Yan yung pinaka-base natin. Okay? Now, what's this RM? Risk or market rate or market risk. Basically, this is the rate in the market in general. Okay? Magkano ba yung market rate? Market return, which is of course translated din yan into market risk. Magkano ba yung return in the market? Okay, in general to, a market in general. So, risk-free is the same. Ito yan. Yung risk-free na yan. Pareho lang sila. So, ngayon, itong minus natin, yung market rate versus the risk-free rate, ito yung tinatawag nating risk premium. Dagdag na risk. Which dagdag na return. Kasi yung investment mo is not risk-free, nag-invest ka dun sa may mas malaki or the market, so may dagdag na risk. Okay? Kaya risk premium, risk premium rate. So, since ang investment mo ay ito, so dadagdagan siya versus compared to the risk-free. Nakuha? Let's say, kunyari, kung ang risk-free rate is 3%, tapos in the market, the return is 12%. So, since sa market ka nag-invest, may dagdag na 9% yon. Tama? Kasi the risk-free is 3% eh. Kung risk-free ka lang, sa 3% ka lang. But since you invested in the market, plus 9%. That's the risk premium. Kasi, or market risk premium, minsan tinatawag. Kasi doon ka sa market eh. Bakit tayo guys? Na itong B, this is beta coefficient. This is the relationship of your investment to the market. Okay? On how your investment is related to that compared to the market. Let's say, for example, if you have a beta coefficient of 1, pareho lang kayo. Kung ano yung galawan in the market, ganun ka rin. Okay? If you have a beta coefficient of 2, ibig sabihin twice ka. Twice volatile yung sayo, the market. Yung market moves, ganito ka small, yung investment mo moves twice. Equivalent. Nakuha? Kaya tinatimes natin yan, yung beta coefficient. If you have a beta coefficient of 0.5, ibig sabihin, mas maliit yung galaw mo. Half lang siya compared to that of the market. Nakuha? So, yun yung beta coefficient. Tinitignan natin how is your investment related to that of the market in the general. Okay? Kaya yan yung formula natin. For example, dito sa baba, may problem tayo dyan. Okay? B company stocks has a beta coefficient of 1.4. Mas malaki siya in the market ng 0.4 pa. No? B The market rate is 12.5 and the risk-free rate is 9%. May flotation cost na 7%. Although hindi natin kino-consider dito yung flotation cost, guys. Kasi ginagamit natin yung flotation cost if we are considering cash flows, dividends, tapos yung proceeds from the issuance of shares. So dito hindi natin tinitignan yung cash flow eh. Directly, tinitignan na natin magkano ba yung rates. Okay? Ngayon, dito sa formula, sabi natin, kung nag-risk-free ka lang, 9% ka lang. But since, pag nasa market ka, 12.5 ka. So, kung titignan natin guys, kung dun ka lang sana sa market, ito lang sana yung mangyayari. 9, kunyari considering 1, kunyari 1 yung pareho ka na sa market. Magkano dito yung yung risk premium? Magkano yung risk premium dito? Magkano? 3.5. Since nasa market ka, mas malaki yung return doon but additional risk. No? So 3.5 times 1, 3.5 plus 9, babalik ka na sa 12.5. If you are the same with the market, kasi nga, 1 yung beta coefficient mo eh. Sunod ka lang, sabay ka lang in the market. Nakuha. So kung 12% yung market, 12% ka rin. Okay? But since, yun na nga, may beta coefficient eh. Titignan natin kung ano yung relationship mo with the market. So may risk premium tayo ng 3.5 at yung equivalent movements mo is 1.4 compared to the market. So 9% plus magkano to 1.4 ng 3.5. Ang equivalent mo ng movement is 1.4. 4.9. So mas malaki yung sa'yo. Kasi nga, mas malaki ka ng 40% maggalaw eh. No? So 4.9. So pag ginad natin ito, this is 13.9%. Yan yung cost ng OS mo using capital assets pricing model, CAPM model. Okay? So try natin dun sa multiple choice. Actually may CAPM dyan agad yung kanina. Number 81, 181 paki-solve. Okay, number 181. Ano sabi niya? Gamit ka daw ng retained earnings. Beta coefficient is 1.15. The market rate is 12.5 and the risk-free rate is 8.5. The new issue common stock were used in this model. The flotation cost is 7%. Based on CAPM, formula tayo, so lagay lang natin. Risk-free is 8%, no? The beta is 1.15. Sorry, magkano? 8.5. The market rate is 12.5. Same risk-free, 8.5%. 8.5 lang sana kung risk-free ka lang. Pero may additional to sa market na 4% risk premium kasi sa market ka eh. And the equivalent ng sayo compared to the market is 1.15. So, magkano yung risk premium sa'yo based on your investment? 4.6. So, magkano yung return based on CAPM model? 13.10%. So, number 181 answer natin is letter D, dog. Okay? Now, let's try to answer some of the multiple choice questions, especially the theory. Tignan natin first, 169. 169. The minimum return that a project must earn for a company in order to leave the value of the company unchanged is obviously number 169. Answer natin is letter D. The cost of capital. Parang mag-break even ka na doon eh. Kung yung in-earn mo is just equal to the cost of capital. So parang break even na yun. Kung magkano yung kinita mo, yun din yung ibabalik mo sa investors. So next, 170. The theory underlying the cost of capital is primarily concerned with the cost of long term. Okay, and basically new funds ang tinitingnan natin dito. So, 170, answer natin is letter A. Kaya nga palagi natin kinoconsider yung flotation eh. What if may issuance? What if may bago? Now, 171. Which of these statements are pertinent to cost of capital? Paki-analyze. Okay, number 171, tignan natin. Which of these statements are pertinent to the cost of capital? Number 1, it is the return that investors demand for a given level of risk. Yes, no? Kung ikaw investor, yan yung ina-expect mo. Kung ikaw yung gin-finance, that's part of your cost. So, number 1, yes. Number 2, it may be employed as a benchmark for evaluating performance. Yes, no? Tinitignan natin yan. Kino-compare natin yan, yung return ng particular project versus the cost of capital. Number 3, for investment decisions, it must be based on current or prospective cost rather than historical. Yes, no? Tinitignan natin kung magkano ba siya ngayon or later. Pero yung past, hindi na. Number 4, it may also be used in acquisition analysis, liquidation studies, and source of financing decisions. Yes, no? Typically, it's a source of financing decisions. Sa acquisitions dito sa ating PET, ginagamit natin yung cost of capital. Typically as a discount rate. No? Number 5, it may differ from the hurdle rate used to reflect the alternative risk attributed to specific project, decision, or business unit. Yes, pwede. Yung hurdle is the minimum rate. Sometimes the company can set a higher hurdle rate or minimum rate. Depende na nga, depende sa target ng company. No, but of course, that's the lowest. Hindi ka pwede mag-set ng target below the cost of capital. Palugi yun. No? Dapat at least the cost of capital or even higher. So number 175, all statements, letter A. Next, 172, a firm's optimal capital structure. Yung parang dun sa U-shape na yun na natin sa inyo. U-shape na cost of capital. Number 172, answer natin is letter C. Maximizes the degree of financial leverage. Kaya nga more on debt ka eh. Up to a certain point nga lang. Okay, up to a certain point na ma-minimize mo yung cost of capital. That's the financing leverage. Next, 173. Companies made the decision, mag-finance siya ng capital projects using debt. Debt yung gagamitin niyang source of funding for these projects. So, sa benchmark, yung gagamitin natin, obviously, is, of course, cost of the debt after tax. Number 173, answer natin is letter B, boy. But of course, if it's a mix, average mo. Mag-weighted average ka ngayon. Pero kung debt lang, hindi doon ka sa debt after tax. Next, 174. A firm must select from among several methods of financing arrangements when meeting its capital requirements. To acquire additional growth capital, we're attempting to maximize earnings per share. Mama-maximize natin yung earnings per share. A firm should normally, so ano ba yung gagawin natin dyan? Okay, number 174. Additional growth in capital, but you will maximize the earnings per share. Tingnan natin, no? Yung mga choices. Letter A, attempt to increase both equity and debt in equal proportions. Pag ganun, hindi rin mag-move yung cost of capital. Wala rin naman siyang impact dun sa earnings per share. No? Kasi madadagdagan din yung shares eh. B. Select debt over equity even though increased debt is accompanied with interest cost and degree of risk. Yes, ito yung atin. More ka, kasi nga, financing leverage ka eh. So, doon ka sa debt financing. Para less equity, mas malaki yung answer pag nag-compute ka ng return on equity. Okay? Siyempre, baliktad yung sa letter C. Letter D, discontinue dividends. Yan, pwede yun. And use current cash flow which avoids the cost and risk. Increased debt and the dilution of EPS through increased equity. Okay din naman sana siya, no? But yung hindi ka ng dividends, may consequence yan to the company. So number 174, answer natin is letter B, boy. You are going towards debt financing. Next one, 75. If K is the cost of debt and T is the marginal tax rate, the after cost of debt K is best represented by the formula. So, paano natin ko-computein yung cost of debt? K times 1 minus tax rate. Yan yung after tax rate, yung 1 minus T. So, number 175, answer natin is letter D, dog. 1 minus tax rate. K times 1 minus T. Number 176, sige natin. In general, it is more expensive for a company to finance with equity capital than debt capital. Bakit daw? Okay, number 176. Although the preferred answer natin dapat dito sa pag mga ganyan yung question is that, of course, debt financing, yung interest expense, is tax deductible. Kaya nga after tax yung ginagamit natin. Kaso lang based on the choices, wala dyan. Okay? But, yung gagamitin natin concept dito is that the expected risk is eventually translated to expected returns. Diba? Risk and return. Yung natin yung concept natin dito. So, number 176, sabi niya letter A, that's because may maturity date daw and to be repaid in the future. Hindi naman ganun yung issue dyan. Equity capital is in greater demand. Hindi naman natin, we have to qualify pag ganyan Letter C, dividends fluctuates to a greater extent. Pwede rin naman siya kasi basically may risk. But yun na nga investors are exposed to greater risk with equity capital. 176 answer natin is letter D. Kumbaga, if you are more exposed to risk, normally you would expect more return. Diba? For high-risk investment, malaki din yung return na ina-expect. Yun kasi yung hirap sa equity Siyempre, if a company loses, the equity owners lose. Pero yung sa debt, naka-fix yung kanilang interest So, generally less risk. Yun. So, 176 answer natin is letter D. Number 177, when calculating the cost of capital, the cost assigned to retained earnings should be. Now, ito pag may bagong project tayo, if we're talking of a new project, yung financing kasi natin, of course, pwedeng mag-issue tayo ng bagong debt securities, bagong bonds, or bagong shares. Or pwedeng gamitin natin yung ating internal financing, which is nga retained earnings. Okay? Pag hindi sana natin gagamitin yung retained earnings, so wala tayong problema dyan. Hindi natin gagamitin yun. Kumbaga, kung bagong debt, bagong bonds, or bagong shares, yun lang. But considering, let's say, nagagamitin natin siya. So when it comes to the cost of capital, typically, kung wala sanang flotation cost, it would be equal to the cost of ordinary. Kung wala sanang flotation cost. But considering the presence of the flotation cost, yung cost ng retained earnings would be less compared to the new or external common equity. Kasi may flotation cost Diba? So number 177, it could be equal, but I don't think the problem is looking for equal, but lower than the cost of external common equity. Bakit? Because sa external common equity, may flotation cost Flotation cost, effectively, bumabawa siya dun sa cash na pumapasok or dun sa funds na magagamit natin. Therefore, leading to a higher effective interest or higher cost ng ating common stocks. So 177, I could say this is letter D though. Kung mapapansin nyo, wala yung open and close parenthesis. These are, I believe, mga questions na ginubra ng author. No? Mga dinagdag ng author. Hindi niya to kinuha into a particular exam. No? Okay, next one, 78. Tingnan natin. The difference between the required rate of return given risky investments and that on a riskless investment with the same expected return. The difference daw nung ito yung with risk investment versus those which are risk-free. Ano yung sinabi natin sa inyo doon kanina? Risk premium, that is letter D. Dog. Additional risk siya. Additional return for that additional risk.